Joining me now, with great pleasure, we bring in Art Laffer, former Reagan economic advisor, Presidential Medal of Health recipient, and the author of Taxes Have Consequences, Indeed They Do, and Steve Moore, Committee to Unleash Prosperity, FreedomWorks chief economist, and author of Govzilla. Steve Moore, I begin with you. We have met the enemy, and the enemy is us. When you look at the numbers, right now, Russia has recovered most of its oil production, and we are still over 1 million barrels short. The Energy Information Administration says we would be up to 13, 14, and then 15 million barrels. Gasoline production is down, and even gasoline inventories are down. That's why I say we have met the enemy, and the enemy is us, Steve Moore. I ask you, why is Biden still blaming Putin? I mean, blame Putin for a lot of things, but energy, the problem is here with the war against fossils.
Yeah, I'll say it again, that the month that Donald Trump left office, we actually were exporting. We're a net exporter of oil and gas, and as you know, Larry, now we actually have to import it. I mean, it is really humiliating, frankly, that now we have to go to other countries like Saudi Arabia and beg them to increase their oil output. I think you put it very well. I can't improve on what you said, Larry, except, if anything, you understate the issue, because when we were producing that 12 million barrels a day under Trump, the price of oil at that time was somewhere between $60 and $65 a barrel. As I'm looking on the screen right now, I see that the price is $120 a barrel. This is an incredibly price-sensitive issue. That is, every time the price goes up, they would increase drilling. So I think at the very minimum, we'd be at 15 million barrels a day. We could be a lot higher than that. And just one last point. Do the math on here. If let's say the price is $100 a barrel, and we're, let's say, 2 million below where we should be, we're talking about, billions and billions of dollars per week that we're losing as a country because we're not producing oil and gas. And we're not consuming less. It's just we're not getting it from Texas and Oklahoma and Alaska.
Art Laffer, look, we can blame Putin for a lot of things, Lord knows. The guy's he's a war criminal, he's a terrorist, he's corrupt, and all the rest of it. But Art, in terms of the world oil shortage, and that includes the gasoline shortage, we are the problem. We in the U.S. are the problem. And as you always say, tax something and you get less of it. I just want to add to that, regulate something and you get less of it. Overregulation of fossil fuels has created this shortage and high prices, which are killing consumers and real wages.
Yeah, you're completely correct again. But, one thing that Janet Yellen made the comment about was that inflation is a worldwide phenomenon, therefore it's not our problem. The whole world community is operating here, Larry. It is our problem, and the thing is we're exporting this problem to other countries as well. The oil crisis that we precipitated and the prices of energy, we have exported to all these other countries that are having horrible times as well. It's not just us we're doing damage to, it's they too. And the second thing, just to mention, is they talk about this wonderful Biden economy and how we're growing like mad. Do you realize that today we have 800,000 less jobs than we had in February of 2020? 800,000 less jobs, and we're over 5.5 million jobs below where we would have been had we just stayed on trend. And the first quarter's GDP was minus 1.5%, and this quarter's GDP has been revised from 1.3% to now 0.9%. All of this is moving in the wrong direction, and we are the precipitators. We are the problems here. Period.
Art Laffer, by the by, on that point, I'll go to Steve Moore on this. Seems very excited about it. Steve, core inflation is, I don't know, half in Europe what it is here. So that's a big difference. Europe has high inflation because they buy all their oil and gas from Russia. I get that. But core inflation is much lower in Europe than it is here. So that puts another lie to the Biden arguments. And by the by, our fiscal stimulus, this is from Jason Furman's, he was an Obama-Clinton economist. He's a smart guy, straight shooter. Our fiscal stimulus was much more substantial than Europe's fiscal stimulus. So even that argument breaks down. I mean, basically every argument breaks down.
Yeah, as I was mentioning to you earlier today, Larry, I'm actually testifying tomorrow before the House Budget Committee because Arthur Laffer wouldn't go, and I'm taking his place.
Who else wouldn't go?
I'm not making this up, Larry.
Who else wouldn't go? Who else
the
wouldn't go?
Democrats are having a hearing where they are basically, the theme of the hearing is that they think that it's a celebration of the Biden economy. Can you imagine this? They want to celebrate how well Biden's policies and his fiscal stimulus work. One other quick point. I don't believe Joe Biden or the Democrats or their left-wing enviros when they complain about high gas prices, Larry. They want high gas prices. They hate this industry. They want to run out of the business. Remember in that debate that Biden had with Trump, Biden says, I want to put this industry out of business. So if you want to do that, a good way is to shrink its output.
Yeah, shrink its output, that's it. Art Laffer, so there's a better way. There's a supply-side growth way. I've just kind of outlined this. You know, let's make the Trump tax cuts permanent. Let's move to a flatter, broader tax code, simplification, right? Let's deregulate energy and industry across the board everywhere. Go back to deregulation, Art. Let's freeze domestic spending, and let's protect King Dollar. Wrap it all up into a balanced budget plan. Now, that's just, you know, bare bones type stuff, but you can add to it, you can subtract to it, but to me, this is the kind of plan that the senators and the House members and the GOP should be running on.
Yeah, they're the 5 grand kingdoms of macroeconomics, Larry, and you hit them there. Broad-based, low-rate, flat tax, spending restraint, sound money, minimal regulations, and freer trade. That's the package right there. I mean, we're looking at this. I'd love to see the Trump tax cuts made permanent. I don't think there's a chance in heck that that's going to happen. I would love to see King Dollar brought back, but there's not a chance that's going to happen with this Fed, Larry. We've got this long haul, this long slog to go through before we can get anything. You look at Powell and the rest of the Fed members, they really don't know what they're doing. And they've got to be panicked today. What did the rate go up to? 340, 345, something like that? And it's still way, way, way too low. It's got to go a lot higher before it does control. So I'm with you 100% on the goals, on the dreams, on the North Star, but we have a long way to go before we can really have the cavalry bring it back home to rest.
You know, Steve
How's
Moore,
that?
Art, that's very good, by the way. Art,
cavalry.
Steve, Art makes an important point, though. Stocks down almost another 900 points. Stocks are getting clobbered right now. Okay, that's a recession signal. But usually, at least lately, when stocks go down, the 10-year interest rate goes down. That's not happening. The 10-year interest rates popped way up to whatever it is, 340 and stuff. And inflation expectations in the tips market are looking the same. So, Steve, I'm thinking these are signals of inflationary recession, all right? And I don't think we can get out of this without a recession, but I think the real killer is going to be inflationary recession because of what Art just said. It's not likely. I mean, let me ask you, Steve, why not raise 100 basis points? 100 basis points in June, 100 basis points in July, 100 basis points in September, until we see these price indexes coming down. Now, will the Fed do that? Will they take that action?
Well, you know, I'm in full agreement with you, and Art Laffer and I were on Capitol Hill today. We were recommending exactly that. You got to keep raising the rates until you start bringing the. We cannot go forward with an 8.5 to 10% inflation rate. It'll kill the economy. It'll kill family incomes. We're looking right now, Larry. If this inflation continues at this pace, we're going to see the biggest decline in real family income in 2021 and 22 that we've seen in many, many years because people's wages can't keep pace with this. So you got to do something about the supply side. The thing that worries me the most, because people are in a panic right now, you see consumer confidence is way, way down. Small business confidence is down. Investor confidence is down. And tell me one thing that Joe Biden has said over the last 2 months that has inspired confidence in this great economy of ours. Nothing.
2 months. 2 months. How about 18 months?
18 months.
Yes, sir. How about 18 months? Where'd you get 2 months? Holy cow. You were on the Hill.
Well, because
you were on the Hill too long
is,
today.
No, as the market has melted down, I was praying, Art Laffer, that he would pull a Bill Clinton, but he's not doing it.
No, he's not doing it at all. I mean, when you look at it, it's just, I don't see how we get out of it with Biden there. I mean, Reagan said it correctly. I said, when you lose your job, it's a depression. When the other guy loses his job, it's a recession. And when Biden loses his job, it'll be a prosperity. And that is the true picture. We just can't deal with these people. They are incompetent.
But, Art, last word to you. I think it's important that the GOP, Senate candidates, House candidates, I think they have to have a growth message, not
Yes.
a root canal message. In other words, recession may be inevitable, perhaps, but I think you have to show a plan, a strategy, okay, a blueprint that is pro-growth and anti-inflation at the same time. You get the last word.
Yeah, I agree with you totally. We can't just run against Biden, against the Democrats in Congress. We've got to run for something. And what you said earlier, a low-rate, broad-based flat tax, spending restraint, impounding funds that have already been authorized but have not been spent, doing that, sound money, and I don't know how we do that with this Fed, but then deregulation, we can do that by the Trump plans on that, bring back oil, all of that. And lastly, free trade, Larry. You've always been the massive champion of free trade. You and Steve are really big free traders, and I join you in that 100%.
I am totally free trade, ... except when it comes to China. That's all. I'm going to make that point. Because China will never be reciprocal, and they will keep their trade barriers, and you have to hammer them on general grounds, economic and national security. But the rest of it, free trade, you're absolutely right. We all oppose the steel and aluminum tariffs. That was not President Trump's best policy. I got to get out of here. I just think we have to have a pro-growth solution to this inflationary recession that's before us. That's what the stock market's now telling us. Anyway, gentlemen, Art Laffer and Steve Moore, thanks ever so much.